Following the presidential debates that happened last week here in my hometown of Atlanta, Georgia, President Donald Trump and President Biden went at it once again for the rematch of perhaps the decade. And we saw some interesting things happen during the debate and afterwards. And I want to talk about this, and I'm going to do my very best to stay as unbiased and kind of not picking sides or anything like that. But more important to all of us, how a potential Donald Trump re-presidency or a second term for him could impact the markets. As according to predictit.org or .com, there's a big distinction there. Predictit.org has just shown recently, following that debate, a much larger chance for Donald Trump to potentially become president. And while there is no saying for sure or for certain who is going to be the president, this is way too soon, there is still the worthwhile conversation to have about if Donald Trump were to become president, or if Joe Biden were to serve a second term, how that could potentially impact the markets, which is something I know we all care about. So let's go ahead and get into it. So the first market I want to talk about in terms of just a general viewpoint on this upcoming few months is gold and the VIX. In my personal view, whether or not we get President A or President B, both scenarios are likely to come with some rocky roads ahead. And that rocky roads ahead, what I mean by that is what's going to happen in foreign affairs, what's going to happen with inflation, what's going to happen, locally. Are we going to have, riots and protests, and is there going to be another Capitol situation? I don't know, but neither does the market. And when the market doesn't know something for sure, when it's concerned about a potential something happening, like in the Middle East, like in Ukraine and with Russia, or Taiwan and China, these scenarios, these question marks, as I'd like to put them, cause uncertainty. And uncertainty can be a very positive thing for gold. Take a look really quick during the October situation of last year. We saw October 6th, I think it was the day that Israel and Hamas really kind of went to war, right? There was an official, strong stance taken. And so you can see what happened to follow was just a straight shot to the upside for gold. And I just happened to remember that I was actually bearish on gold at the time, but I didn't get short because I knew in that moment what fundamentally that meant for gold. When there is a huge question as to what's coming next in the financial markets, really, really concerning potential outcomes like war, or, a change of presidency or a continued presidency and what that might entail, the market doesn't like that uncertainty. Another example I can think of just really quick off the bat for uncertainty was when the dollar was shooting straight up for like a year straight in 2022 because nobody knew where inflation was going to stop and how high the Federal Reserve would need to take the Fed funds rate. That was a huge question mark and caused a lot of fear. And so again, the dollar went up during that time. So this year, is gold going to go up? In my personal view, I've been bullish on gold all year. My target at the beginning of the year was 2280. So we already hit my target a while ago for the year, but I do think that there is the potential for another leg higher on gold. And the reason for that is the uncertainty surrounding the election. So first of all, for me with gold, I'll just give you my 2 cents. I've said this many times on my channel recently. I'm bullish on gold currently. My setup is this 2300 level as a supportive zone. And if that breaks, then I'll probably look for a better opportunity or some bullish price action. But I am looking to see if we can get a breakout. If you're more conservative, waits for some sort of breakout, pullback, but I generally think that there is upside for gold amongst this uncertainty in the markets. Real quick, I want to jump into this video also and let you guys know that our software tools, which help to analyze fundamental analysis stuff like the GDP statistics, PMI numbers, retail sales, NFP, CPIs, and commitment of traders data, all of this stuff is currently 50% off for our summer sale that we're doing right now. So if you're watching this video and you've thought about getting our tools before or in the past, this is your best chance all year to do so for 50% off. Down below in the description of this video, the first link will take you to a spot where you can chat directly with a member of our team and ask about this sale. Again, this is only a limited period of time. We're doing this for just a short window. So if you'd like to get a copy of the Edge Finder for the biggest discount of the year, don't miss it. First link in the description, get access to all of our tools and data. Now back to the video. Another area that's been on the rise recently, perhaps in anticipation for a change in leadership, is actually oil. And you can see oil is really trending higher. And I thought this was really worth mentioning because if oil trends higher, we talk about this regularly on the channel. If oil trends higher, it can often lead to inflation because higher energy prices mean higher transportation prices, which get passed on ultimately to the consumer, which can cause a rise in the CPI, the Consumer Price Index. So a rise in oil prices is something to keep an eye on because if this continues, we're now sitting around just under 85 at the time of recording this, and maybe some time between when you guys see this, but if this continues, if you do continue to see a trend higher, that could be very, very concerning to the inflation story. By the way, I'll tell you not only what my opinion is, but where my money is at. I am currently long XLE. This is a sector ETF that tracks energy companies. So these are your Exxon Mobils and Chevron companies, which I think could actually do quite well if we do see a change in leadership. Energy is, here's the thing, before we get into, what my opinions are on the politics, which I'm not going to go into in this video, but when we get into the idea of what happens if we do see a change in leadership, let me get something out of the way. Either president is going to spend, and then when they're done spending, they're going to spend again. Because what they do is, it doesn't matter if you're a Republican, Democrat, etc. The way our system works in the US, which is a little bit, something that many people are critical, including myself, is that to look good, to collect votes, you need to deliver, you need to do amazing things. And in order to do amazing things, it costs money, right? So a lot of spending goes on regardless of either one. And in fact, let me pull up some stats in terms of spending between the two presidents during their terms. So when you look this up on the internet, and this might be a place where I get in trouble, I'm just going to share what I found here. In the first 3 years of Trump's administration, America's total debt increased by 2.5 trillion. In the first 3 years of Biden's administration, our total debt increased by a staggering 4.7 trillion. Now this is Fox Business, so bear with me here for a second. Even if one were to gloss over the fact that Biden's term is not yet over, the worst that can be said is that America's total debt burden increased by 6.7 trillion under Trump and 6.3 trillion under Biden over their 4 years. So who spent more money? Well, again, it's kind of a toss-up because there's a big variable in here we need to talk about, and I'm going to talk about it in just a second, which is COVID-19. Based on the provided information, this is Twitter's Grok, it appears that President Trump spent more during his administration than President Biden during his. You can have a fight over this all you want, but one thing is for sure, they both are pretty good at spending a lot of money. Now, again, you might have opinions as to who spent it more reasonably, who did what with it, but that's not the point of this video. The thing that I want to get at is that when it comes to the stock market, which one will deliver more for stocks, which is maybe our next topic here. Now, during the Trump presidency and Biden's arrival to the scene after his first term, Trump was dealing with, again, a pandemic. We all were. Biden inherited that problematic situation, and so both of them kind of had that in tandem. Let me show you something really quick. So when the two old men were fighting on that debate stand, one thing you'll notice is that they argued to no end about the who caused the unemployment, who inherited the worst unemployment. And maybe Chandler, you could find a clip of that so it's not just from mine, but the part where, again, they're debating unemployment and who had it worse and who did it poorly and whatnot.
The fact of the matter is there's more small black businesses that have been started than any time in history. Number two, the wages of black unemployment is the lowest level it's been in a long, long time. Number three, we're providing housing for black Americans.
His big kill on the black people is the millions of people that he's allowed to come in through the border. They're taking black jobs now, and it could be 18, it could be 19, and even 20 million people. They're taking black jobs.
Now, again, you'll see these two fighting it out, going back and forth over who did what. COVID is an external variable to anyone's presidency, in my personal opinion. You can't really, nobody can control that. Nobody could have controlled what happened there. Now, how you reacted, that is certainly a place for debate. However, when we look at the numbers, what we see here is that unemployment was low pre-pandemic. It was, around all-time lows. We were down in the threes, which, by the way, we got ourselves back to over time. And who is to blame for this spike in unemployment? I don't think that is a fair question to really ask, because again, it's an external force. And if you really were to draw kind of an average line, you can see we pretty much resumed back to where we started. Now, a ton of spending happened during this time in terms of the government's budget, because we shut down the world's economy, right? The world economy shutting down gets basically put into the spending frenzy that went on. So we see this huge spike in unemployment. And again, here is, by the way, this is some times and dates: April 2022, May, June, July. So you can see that, when they were debating, you can ask, well, you could say, well, look how good I did to get it back under control, and look how bad you did it to get it out of control. But, again, I think that the truth is this was going to correct no matter who was the president. I don't think that was necessarily. Now, again, keeping it where it is and now going forward, this is where things really matter, because the spending or the kind of the policies that go forward will either keep this at this low unemployment rate, which is historically very, very low, or it could trickle up if we continue to see problematic inflation and it starts to really hurt the economy. Now, I've got an hourly chart of the US 10Y, which is the 10-year Treasury bond yield. And you can see here that going back right around last Thursday, even leading up to it and following through, we've seen a rise in the 10-year yield. Now, one thing that you could argue is happening here is that with the increased probabilities of a potential second term for Donald Trump, the market is thinking, oh no, we're going to get more inflation. Arguably, a lot of people are concerned about the idea that Trump has of the tariffs on imported goods, citing that it could lead to massive inflation. Now, again, I am not an economist. I'm not, I haven't dug through the statistics on whether or not that is true or not. But as a market, as a trader, what we see here is what matters. What we see here is that the market thinks that could be inflationary and that we could see inflation actually tick higher, which is not what the market wants to see. So increased spending is potentially good for the stock market, but a resurgence in inflation, if that happens, could certainly bring us back to the negotiation table about interest rates, which could lead to a substantial fear in the market, right? So that is something to concern. I know a lot of people would say, whoever is going to be the president, as I mentioned earlier, the market could continue to be hot and strong. But I actually think that if we do see inflation surge, and that is a concern of the market right now, we could see the market actually trend lower. We've been on a hot streak. We've seen things just rising, but it's a thinly led market, which I've talked about often before. Not all sectors are participating in this rally. Not all stocks are participating in this rally. Speaking of which, I put this on my Twitter yesterday. This was just a screenshot of the heat map of the US S&P 500. And what you can see here is that this has kind of been the story of this year. You've got technology over here and comm services, which is kind of technology light, if you will. The tech stuff is green. The big stuff is green. But then a huge component of this heat map is kind of red, and that is including things like consumer defensive companies, your real estates, your utilities, basic materials, you got industrials here, healthcare. These things have not done particularly well. And so, also noticing healthcare, right? That's another questionable kind of debate heavy area when it comes to who's going to be president and how that might impact. By the way, if you have anything to add to this, please feel free to comment down below. I know that this is a controversial subject, so please keep it PG down in the comment section. But what do you think in terms of markets that could go one way or the other? My opinion is that, again, for the rest rest of this year, I don't think it's going to be completely smooth sailing. I think that, the market has been so smooth this year, but I don't expect that to continue personally. I do think we are going to see some hiccups. Now, I'm not calling for a big bearish reversal or anything like that, but I do think it is appropriate that as the election gets closer, be a little bit concerned about, perhaps the VIX spiking up. And usually with a VIX spiking, it usually entails a market movement up and down. It can be very volatile. So I do think that volatility could improve or could increase this year as people try and weigh the odds. Another thing that I think I've heard that could be interesting is domestic companies versus international companies in the US. So if you're getting down to the individual stock level, something to consider is that if you get a Trump or Biden administration, with the tariff ideas, with the tax or the import tariff ideas from Donald Trump, that could certainly help domestic companies and hurt international ones, if you think about it, right? Because if people are way more preferable towards U.S. goods because of the increased price that gets passed on to foreign companies, that could be good for domestic companies. Now, is there some repercussions there? Probably. There always is. Nothing is easy and free in this world. So there's probably some problematic stuff, but it could also lead to domestic companies doing quite well. So, you could pick out companies that you like on more of the, in the States side of things, which might help small businesses, right? A lot of small businesses are more domestic focused. So maybe you see an expansion in the Russell, contingent upon the inflation story. That is my opinion there. I think the Russell could fly if you do also see progress being made between now and the presidential kind of change if it happens. So, the Russell may be a huge upside move if you get kind of a push for domestic, internal help with that sort of thing. I don't know. It could be a very strong thing. Small businesses have really struggled in the last 4 years. The Russell has greatly underperformed the S&P 500. So something to think about. There's lots of different things that you could talk about. My personal opinion, I have already bullish positions on gold. I'm also bullish on energy stocks. I do still like technology. I think that their reliance not being on interest rates is a very positive thing for them. Big mega tech is what I'm talking about specifically. Your Apples and Nvidias and Googles and stuff. They don't need lower borrowing costs in order to because they already have so much cash on hand. So I also like XLK, which I've been long since April. This position has gone really well for me, and I do continue to hold that tactically. So I like technology. I like energy. And to be honest, I also like some of the more defensive areas. The last one I think that is obvious to mention is, well, there's two. I'm going to keep going here. There's just so many to talk about. Defense companies, right? So your Lockheed Martins. So your Lockheed Martins could see increased spending under a Trump administration. That is, of course, they create many things for the military, aerospace stuff. And then at the same time, there is an interesting solar ETF that I follow, which this to me was the most obvious thing that told me the market is concerned about whether or not a second term for Biden could occur. This is the solar ETF, and I've been bullish on this thing. I took some trades. I got called away from my shares, and I'm feeling very grateful that I did get called away. I sold calls against my position, got called away, and then the market has just dropped for TAN, which is a solar panel or solar ETF. Companies that sell solar-related panels, things like that. So this has dropped precipitously because of, again, a lot of the tax incentives and clean energy stuff that many people are kind of anticipating or wanting from the Biden administration. If that gets reversed by Trump in any way, if there's any kind of change in that policy, it could substantially hurt solar companies. Why is that? Solar panels are very expensive. Tax incentives help to offset some of that ginormous expense. But with high borrowing costs and a potential change in administration right now, TAN looks under threat. You're either getting, if you do get a Biden administration, this could seriously rally, right? you know, because again, we might see this move here recently has just been off of the, I would say, a lot of the concerns about interest rates staying higher for longer and a potential change in administration. This is either a really, really great price right now or has room to continue going lower if policies get reversed. So something else to think about when it comes to, you know, individual kind of spaces in the market. TAN, the solar ETF, could be really interesting. And a bonus one. A bonus one would be China. And I don't really have a strong opinion on this, but we did see under Trump a lot of trade war stuff, and the relations between China and the US were pretty clashing during his administration, to say the least. 2018, we saw a huge, you know, a 20% pullback in the stock market due to the trade war concerns. China is another ginormous global kind of center and, you know, giant economy. So, you know, FXI, this is the China large cap ETF, has seen a little bit of a decline here recently. I'm curious to see where that goes. This one also may do well if you see a Biden administration, or maybe, you know, I really don't have a strong opinion on this, to be completely honest, but China's really been struggling. They had a little bit of a false start here. It seems like the, you know, moving averages started to align, started to see a little bit of a bull market. I think that either resumes or falters based on what happens with Taiwan and or the administration, potential change or continuation of Biden. So we'll have to see. Thank you guys for watching. If you enjoyed this video, make sure to hit that thumbs up button, subscribe, and stay tuned because I will be doing more videos on this. Again, please keep it PG in the comment section. I know this is a hot topic, but it does matter to the markets. And so I'm doing my best to just kind of give you guys my no nonsense kind of unbiased. To be completely honest, I really don't have a huge, you know, preference when it comes to these two guys, but what I do care about, as you guys know, I do this day in, day out, is how each could potentially impact the markets. If this was helpful to you, make sure hit that thumbs up button. We'll see you next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.